All right. Good morning, trade pros. Sound check 1, 2. Hope you're all having a wonderful day. This is George from Trade Pro Academy, and we're here to do morning market update for this beautiful Wednesday, August 14th, 2019. It's laundry day. This t-shirt has a little bit of a stain underneath, so I covered it with my bum bag. And now I told you, so you might as well not have wore it. But hey, you know what? Sometimes you got to disguise things when needed. I want to look good for you guys. So today we're going to talk about a few things. First and foremost, what caused the market rally yesterday? It was, first of all, yesterday we got into the day saying sell rallies were going to be bearish, and the market ripped. And inevitably, somebody leaves a comment, "Aha, you're the guy getting stopped out." And if you're watching a 9 a.m. video and then there's a massive news report by 10 a.m., obviously things have changed, right? You can't take something from 9 a.m. and apply it to 10 a.m. for the whole day. One of the beauties of what we do here is that when we start the day, we have an idea. It's not a sentiment. The difference between a sentiment and a bias is that you're prepared to get murdered over one thought. And for us, when we said get short, the beautiful thing about yesterday is we got into the room looking for a short position to start the day. All right, there was no doubt about that. Everything looked bearish, and it would have gone down had Donald Trump not come in to save the market. And so we didn't have a single short, though. If you look at the Phil's report, not a single short trade to the downside. Because when we got the level we're looking for, we're looking at this thing saying, hey, it rolled up pretty bullish here. Maybe we're going to get some buy stops. Let's delay that short. It's still a little early to get long, though. Just because you're not short doesn't mean you have to be long. You could be on the sideline. So we sidelined the trade, waited for the right opportunity, and we were treated with a news event that really gave us opportunity to get long. So we got long in our team. Yesterday was 80% profitable. All right, 80% of people trading with live capital in our trading room yesterday made money. And we started with a short bias. So what you could learn from this experience is that it's good to have an idea, but when the conditions change in the market like they do today or in these days so often, it's a good idea for you to change as well. If you're shorting a 60-point rally, yes, that's terrible. If you're looking for a short trade, it starts to rally and you get long and you catch 10, 15, 20, 30 points, amazing. Because at the end of the day, we're not trading to be right, we're trading to be profitable. And that comes with the necessity to change your perspective and bias. All right, so at 9:45 a.m. yesterday, Donald Trump announced that he would delay the tariffs. He would split the tariffs, rather, and postpone tariffs on some products like phones and laptops that are imported from China. Those will be delayed till December 15th. All right, so it's a little bit of a de-escalation in the scenario and pushing away the risk aspect of this trade negotiation from September 1st to December 15th. That's an extra quarter. That's an extra 3 months. What's so significant about December 15th? Unless you're a Christmas shopper like me that goes on December 15th and after, you would have done your Christmas shopping already. And so the idea behind this is to allow the holiday season sales to trickle in and not hinder them by splitting and pushing the delays on products that are mostly imported. From China, cell phones and technology and laptops, it's a huge import. All right. And so that gave the market an opportunity to start rallying. Here's what happened, though, yesterday. Don't confuse yesterday for the start of a new bull market. Yesterday was a stop run from short positions. That's all it was. We cycled out a lot of the short sellers that got in over the last couple of days, and we took them out of their positions. Most of them at profit. Some of them near the lows that got trapped at a loss, and that was probably the retail crowd. And so now that we've taken out the stops to the upside, we've actually geared up for another move down. So you would think today is a buy the dip type of moment. Again, I'm starting with a sell the rally moment. I'm looking to sell rallies until such a point and level above which it no longer makes sense. After these morning market updates are over, I turn around and tell the team, here's the level above here, no more shorting. Let's look for a dip buying opportunity. At the moment, I'm starting with some sell side bias, or not a bias. I want to be careful using that word. It's some sell side opportunity. And right now, the overnight low on the S&P is 86. Yesterday's low is 75. All right, so we're getting close to yesterday's low, and the low from 2 days ago, which was the ultimate low of the move down, was 66. So we're getting close to the lows. We erased all of yesterday's manic rally. All right. Now, yesterday, one of the members, I think it was Yasir. Yasir, if you're watching, let me know. But we talked about, hey, you know what? We see a recession coming, and he said, no chance it's coming. And I told Yasir, you guys should read the comment. Look, we could argue about this, or we could learn from each other and say this. None of us really knows at the end of the day. When a recession's officially declared, it's usually 6 months after it's already been started by the Economic Council, right? Because they look at 2 negative quarters of GDP. By that time, your investment account's already destroyed. So you need to be a little bit more preemptive here. And so we said there's some data pointing towards recessionary signs. The biggest one, the 2 and 10-year yield curve have inverted for the first time. And every single time that the 2 and 10-year invert, there's a recession within 12 to 16 months with 100% accuracy going back to all the recessions. All right. Is that important? Yes, that's super important. The 3-month and the 2-year were inverted. The 3-month and the 10-year were inverted, rather, but the 2 and 10 hadn't been inverted. Now it is. All right. So we have an officially inverted yield curve. Mortgage yields are sliding, bond yields are sliding, rather, and it's pushing mortgage yields lower. What does that mean? It means mortgages are getting cheaper. Get this, another interesting fact. End of the second quarter, the mortgage balances stood at $9.406 trillion in the United States. $9.406 trillion, surpassing the 9.29 million that we hit in the third quarter of 2008. As you guys remember, the housing bubble bust, huge deleverage happened, and now we're above that point once again on this cheap and free money. And this is why I tell you, the Fed screwed up keeping rates this low for this long. All right, they dropped the ball. At 2011, they had the opportunity. The market was rallying. They could have stopped cutting rates, and they didn't. They continued their stimulus programs. All right, so now the 30-year mortgage rate has hit an all-time low, which means it's cheaper to borrow money for a new mortgage. And if you have a current property that's gained in this last decade or so on market value, you could do a home line of credit, stretch it, pay the lowest amount you ever will, put that money towards another property, or take the money out and hopefully not spend it on things that are losing investment. If you're going to take money out of a capital gain or a growing investment, you better not buy it on Gucci shoes or Louis Vuitton bum bags. I'm going to be very upset at you. Buy that stuff from passive income, right? Not active income. If you're going to take money out of a growing investment to buy something that the next morning is worth zero and it's only worth something to you, it's not worth it. That's what's happening, though. There's a lot of home lines of credit being taken out because it's so cheap to borrow. All right, China news overnight. China posted the weakest industrial output growth in 7 years in July. 17 years. Damn, I have to scroll. Look at this. These are my notes. It said 7, then I scrolled. It said 17. It's a big difference. All right, China posted the weakest industrial output growth in 17 years, and retail sales and fixed asset investments, the forecast rose for them. However, output expanded only 4.8% versus an expected 6%. And China yesterday fixed their yuan at a stronger level, which is a little bit of a de-escalation of the trade situation. I think they figured, hey, the U.S. gave us a little bit more time. Let's talk about it. So let's fix the rate a little bit higher to show, or a little bit lower rather, to show that it depends on what you're looking at, USD CNY or CNY USD, but they made the yuan stronger to say, hey, here's something from us. All right. And the market's hopeful for a negotiation once again. We'll see how that pans out. We now have till December 15th for some products. There's still tension as of September 1st. This thing was misread as, oh, the situation's over. Everything's good again. All right. But it's not. It's only laptops, cell phones. There's still a round of sanctions coming in September 1st. And really, if you think about the squawk yesterday, it was impulsively bought up, but it doesn't make a massive difference in the grand scheme of things. All right. And so the market's back down. Germany, GDP fell 0.1%, 0.1%, as expected, a matching forecast. Still not a good thing. All right. Angela Merkel yesterday hinted that her reluctance to respond is softening. What does that mean? It means she's not reluctant to respond anymore, or she's a little bit less reluctant, meaning that she's more likely to respond potentially with stimulus. And there's growing pressure on her to introduce some rounds of stimulus in Germany as the economy struggles. All right. In the wider European area, the second quarter growth was just 0.2%. What's a recession? A negative GDP number. 0.2 is pretty darn close to a negative number. So these are the type of facts that I'm trying to present to you guys to understand, because 6, 7, 8 months from now, if the market's down 40%, you're not sitting there scratching your head. Why didn't I do anything? How would have I ever known? That you're knowing. I'm telling you right now, there's potential for 12 to 16 months from now to be in a pretty deep recession. It's just fact. I don't want it to be. I hate to see people get hurt. The traders in our room will make record amounts of profit. And ask those traders what I tell them. Hey, guys, when you make money on a down day like this, be humble, be quiet, all right? Relax a little bit, And remember, people are getting hurt. So take the profit. It's your job as a trader to make money. Don't feel bad about doing it. You step on it, and as the market crashes, you sell the crap out of every rally on big size, and you get paid. All right. However, appreciate the fact that there's people, losing money. Put the rollies away for a couple months, the cars, whatever it is. Just be more humble. That's all I ask. All right. Great power and money comes great responsibility. Privacy concerns. Facebook is in the news again. Surprise. All right. Comment below if this surprises you. All right. Just put yes or no. I'd love to hear from you guys. Let's do a little poll. Facebook confirmed that it's been transcribing audio clips for more than, hold on, that's been transcribing audio clips of its users in Messenger. All right. So if you call somebody on Messenger and you say, hey, man, what's going on? I don't know what kind of conversation you guys have. Mine are lame. Transcribe them all you want. You ain't going to learn nothing. And I have an ad blocker, so I don't click anything either. I'm a losing revenue source for Facebook. I don't click stuff. I don't post stuff other than business, and they have nothing on me. Data's worth zero. However, they've been transcribing audio clips. They've been paying a third-party company to take your calls on Messenger and transcribe them. And when confronted with that, Facebook said, get this is laughable. We stopped doing that more than a week ago. Oh my God. When I read that, I died laughing. What are you talking about? We stopped doing that more than a week ago. Anywho, the real conundrum here is that people who opted into it are the only ones that are supposed to be transcribed. However, if you're talking to somebody who opted in and you haven't opted into this, all right, your data's been transcribed as well. So the big question is, what are they doing with this info? Obviously, they're going to use it somehow to sell you more data, rather sell you more ads, to put more ads in front of you. That's Facebook. And I hear a lot of people complain about there, and they say, why is Facebook doing this? Because it's free. All right. How are they supposed to make money? If you're not paying something to get value out of something, you're the product. Never forget that. All right. Business rule. It's taken me a while to learn. You are the product at Facebook. Very naturally, they're going to try to sell you something. All right. In today's markets, Japan, Hong Kong, China, and India are up. Europe, at midday, London, Paris, and Frankfurt are down. Paris and Frankfurt's down over 1%. Futures in the U.S. all down 0.6 of a percentage point across the board. Dow, SPOOs, S&P 500, that is, and NASDAQ. Crude oil is down 1.3%. Yesterday, we had a pretty big inventory accumulation. 3.7 million barrels added to inventory means more supply. Prices decreased versus minus 3.7 expected and minus 3.4 the week prior. First build in 8 weeks happened yesterday, so oil prices slid. Today is inventory day once again. At 10:30, we have the more substantial, more important, higher volatility numbers coming out from the Department of Energy. All right. And at 10:30, you have the opportunity in 1 hour to make more money than you could make in your job in a week. All right. Am I saying you can only trade 1 hour a week and make more money than your full-time income? Yes. Come in and see the opportunity. All right. We trade it every day that it comes out, which is every Wednesday, every week, in the middle of the week. It's not always great. I'm not going to lie to you. They're not all like easy reports. However, we do the analysis for you. We set up the trade. We give you some levels, and then you make it happen. All right. Gold is down slightly. Yesterday, gold cracked 1,500 for the first time in a while. Bitcoin just got pumped today, down 7.4% to inside of 10,000, mid 10,000s. Treasury yield on the 10-year down 4 basis points to 1.64, pushing lows. 30 years on a record low. 2 and 10-year have inverted. All right. Mortgage applications this morning came out at a record number of new debt, surpassing the 2008 housing bubble. All right. You're starting to see the picture here. And I'm going to finish off on this because this is a long morning market update. I finish off on this. There comes a point in a market that you hit a certain split or a fork in the road. And that one fork is there's economic data suggesting there's trouble. And the other fork in the road is I don't want to go down that fork. It's too bumpy of a road. I'm going to just start to read articles that I believe in that are painting a rosier picture. Ignore that whole road as a potential and go down the road of happiness and just keep buying the dips forever. I'll tell you how that road ends. It's a nice, smooth road. All right. It looks like you're going up a hill at one point and you just drop off. You're plunging. I don't want to say the word. All right. It's nice, smooth sailing until the road gets rough. Whereas if you start to look at this data and question things, be a little bit more critical, start to take action, the road at the beginning is more rough, all right, but it smooths out at the end once the numbers start to come in, all right? It's tough to be contrarian, but contrarian makes money, all right? So choose your road, up to you. I'm not saying down this path, you know, there's going to be carnage in the next 2 weeks. I am saying it's starting to get a bit more bumpy, and that's the road I'm going down. I'm believing it's more bumpy, and there's going to be more bumpiness ahead. Look out. You guys take care. Have a great day. Hope you like this morning market update. Starting out today by selling rallies because it's just weak overnight on decent volume. And if we crack our key level or our, we call it the 50-yard line, crack the 50-yard line, we're going into their other team's territory. We're going to start pressing to the upside and buying dips. Start by selling the rallies. Have a great day. See you tomorrow. Bye. Holy crap. I don't know what coffee I drank. Spoos just broke below new overnight low set here at 80 quarter, guys. Prior day low at 75 3/4. Tons of inventory between 72 to 73. Some inventory lies down at 59. We're going to get a sell-off. All right. That's all we got for today, YouTube. Take care. Let me give the team some levels here, and let's rock.